Hello, welcome to Be the Boss of Your Money. I'm Mitch Goldberg. This is a live stream. Hey, are you one of those people who's still waiting for the retest to revisit the March 23rd bottom to test the low? Are you still waiting for that? Because if you're waiting for that, I'm sorry to say you missed it. And that is why we preach the same thing here at Be the Boss of Your Money. We're not looking to time a bottom. We're not looking to swing trade or get out of the market and get in the market. We're looking to be long-term investors based on an asset allocation that is preferably ideal for you. Let's get into it. We're going to roll the introduction. We've got a lot to cover here. The S&P 500 finally crossed back into the black today. It is now up on the year. And it's really just a remarkable recovery. Incredible. Thank you for joining me. I'm Mitch Goldberg with Client First Strategy. You're watching Be the Boss of Your Money. We're talking about the stock market today. It has recovered completely. The whole year-to-date loss has now become a year-to-date slight gain. But the point is, if we spoke about the stock market recovering this quickly, well, actually, I was about to say, you'd think I'm crazy to say that, but the fact is, I kind of did say it. I called the bottom March 24th. I said yesterday, March 23rd, I think we reached the bottom. The Fed, Congress, the amount of stimulus that's been thrown at the market, and I said the states will be able to reopen quickly. It's all happening. All 50 states are in some form of reopening, some further ahead than others. But when a state reopens, it reopens quickly. And you know something? You can't deny that Americans still love to have a good time. And that's why we saw a massive rally this past Friday, last week, Dow up over 800 points. And we saw a jobs growth of 2.5 million, which was way, way ahead of expectations. So we saw a massive, we were expecting to lose something like 8 million jobs. And we saw a recovery of 2.5 million jobs. We still have a long way to go. But did you know that half the jobs that recovered were in the hospitality and leisure space, like restaurants and bars? Americans are back out having a good time just in time for summer, and we can't wait to get back out. It is driving the stock market higher. The stock market's been going up for the last 50 some odd trading days. We've been talking about that. If you're a viewer of the show, we've consistently been talking about the stock market is on its way up. It is recovering, and there's a lot of firepower left. When the Dow crossed over, I should say when the S&P 500 finally crossed over its 200 moving day average. Let me just fix my light over here for a second. Yes, okay. When the Dow finally crossed over, that's the beauty of life. Anything can happen. When the S&P 500 went above its 200 moving day average, it's something we've been watching for. My reasoning was that once it hits that 200 moving day average, it's a signal that the stock market's okay. It's a signal that investors are anticipating that the economy reopens quickly. And it's a signal to money managers, fund managers, hedge fund managers who have sold off too hard, who've gotten too conservative. It's a signal for them that they have to get back in. And they are getting back in. What are they buying now that they're so far behind their benchmarks and they're doing the good old-fashioned performance chase? They're buying cyclical stocks. Cyclical stocks, the ones that do well when the economy does well. These are the stocks that got hit hard when we thought the economy was going into a depression. Airlines, cruise lines, restaurants, retailers. And what's leading the way the last few weeks? Those same sectors I just announced. We're going to go through a couple of things here. We're going to do first a quick screen share. Share screen. Okay, you see here, continuing. Now you see it. Continuing on the rally from last week, 800 plus point day in the Dow. this past Friday, we've got a 461 point gain on the Dow today. So about 1,300 points in just 2 trading days. It's a massive rally, people. S&P up 38, up 1.2%. It is now slightly up year to date. You know what? If I told you at the end of last year that we're going to be flat going into June, you would have been okay with that. I mean, after the good year we had in 2019, you would have been very happy with that, right? So here we are. You should be happy. If you're an individual stock, look, the average, the S&P 500, which is now about flat for the year, slightly up, doesn't tell you all of the volatility and all of the repositioning and sector rotation that's been taking place underneath the surface. We'll talk more about that investing in portfolio management. NASDAQ up 110 points, up 1.13%. Russell 2000 small cap leading the way, up over almost 2%. And the VIX, this is a little surprising. The VIX is up, and what it should be down on an up day. So the fact that it's up is telling you that there are a lot of people who've made a lot of money in this market. They're getting a little protective, and they're maybe hedging themselves. It tells you that there's some investors who are hedging themselves in case the market does top out. But I think while people are worried about the market topping out, and this has been a very low belief market, I think that adds fuel to the fire. If you think about it, we went into from a peak in February into a bear market in record time, and we came out of the bear market in record time. Is this over? That's the big question. Is this whole bear market and recession over? Okay, the recession is not over quite yet, but the bear market, yeah, it's over. Could we retest? Look, anything could happen. If there's anything we learn, anything could happen, and that's why you have to invest according to your time horizon, your goals, your risk tolerance. Those things don't change no matter what your belief is about the market. Let's take a look at some of the big gainers: Coty, Norwegian Cruise Lines, Alaska Air, Occidental Petroleum, Carnival Cruise Lines. These are the stocks that got hit the hardest, and these are the ones leading the way. But look at the gains, 22%. See where my mouse is? 19.75%. Look at all these double-digit gains. And decliners, Monster Beverage, Lamb Research, Charles Schwab. You know, it's kind of a mix of stocks that were on the decline, but a lot of these are really, to me, more individual stories, not necessarily anything thematic. To find something more, let's just take a look at some of the Dow winners. Boeing. Look, Boeing is $230. I mean, we've been talking about Boeing a lot lately, since it was about 130. And then it's, every day it seems Boeing is up, $15-20 a share. I mean, it's just incredible every day. So last week, this was what, 180? It's 230 now. Dow Chemical, 45. Incredible. Let's take a look. JP Morgan up to 113. Disney continues to climb. Some of the stocks were down. Listen, some of these stocks are the winners during the, the coronavirus stocks when the market was heading down. So, but not too bad. Just a few stocks were in the red today, and no disasters. That's what you'd expect in a market today. But let's take a look at this. This is something I look at every day. Energy, industrials were up there. Strange that utilities were a big winner today. But if the economy is improving and more businesses are turning on the lights and running their air conditioners, then that should be good for utilities. So I'll give them a pass on that. Industrials up, financials up. What was the weak one? What was weak today? Building materials, pretty eclectic. You'd think building materials would be at the top, and you'd think consumer staples would have been a little bit weaker. But that's the way it goes today, folks. But the important thing is industrials, financials, and energy continue to climb. All right, that's enough for the share screen. Back to Mitch, the full face. Back to the full figured. That came out the wrong way. The full face Mitch. Okay, so you're watching Be the Boss of Your Money. Welcome in the live stream. Welcome in the replay. Any questions, hit me up in the comments. That is the best part. So ask me a question if you're watching this on social media, and I want to hear it. I love your questions. I love answering them. That's the best part, and you give me ideas. So there's so much to say. So I'll just give you a couple of quick numbers. The Dow is up about 50% off its low. The S&P and NASDAQ are up in the around 45, 46% from their lows. The Dow is up over 9,000 points since its low. You're talking like what, 51 trading days since March 23rd. So we've seen some remarkable things in this rally. What else? People kept asking, why is the stock market doing so much better than the economy? This it can't last. It can't go on. The stock market has to go down. We have to retest. And a lot of people have been saying that. And a lot of noted talking heads, TV personalities. Listen, the market is anticipating better news looking past the valley toward the next peak on optimism of states reopening and drugs coming out to help fight COVID-19, either through a vaccination or treating symptoms or that, something like in that range. And it's happening. The states are reopening. The infection rate is climbing a little bit, but nonetheless, it's not climbing enough to slow anything down yet. And who's getting infected? I mean, is it nursing home residents getting infected, or is it younger people? We have to see how the protests and the riots from last week have slowed things down, if at all. Okay, just to reiterate my position, I'm all for a peaceful protest, but we'll see if that slows the reopening in the big cities. We'll have to see. So maybe we have to tone things down for the June employment figures, which won't come out until I think they'll come out around the first Friday of July. It depends on when July 4th is. I didn't look at my calendar yet for that. What else? We're getting ready to go back to work. Phase 2 just started in New York, but a lot of other states are way ahead of us. And I think it's about time. I'm trying to figure out why a shoe store like DSW Shoe Warehouse, just for an example, because my wife and I were driving to one of our favorite beaches yesterday. We passed it, and their parking lot's empty. I'm like, Walmart's open, Target's open. Shouldn't and they're social distancing. Shouldn't other stores be able to open? I really think we've got to get this thing going and get the economy open, but do it carefully. I'm not saying give up on the social distancing. Wear a mask, wash your hands, use the hand sanitizer. This is the international sign language for hand sanitizer. Okay, so all right, there we go. All right, so but the huge jobs number, we've been talking about that. We need to see the every Thursday the first time unemployment claims come out. We need to see an improvement in those numbers. And we saw it. We actually saw it, and it came true this past Friday. It was expected that the unemployment rate would jump up to almost 20%. Came in the 13 range. There's some hair on the number. I know it might be a little bit higher than that because a lot of people counted themselves as absent from the labor force as opposed to unemployed. But we did create 2.5 million jobs. Half of them came in the sectors that get hit the hardest. One person mentioned that, average hourly wages are down. Well, average hourly wages have been going up. Believe it or not, average hourly wages have been going up during the recession, the pandemic-caused or pandemic-led recession. But that's because the lowest wage people were the ones who were laid off the most. So the remaining people the people who still had jobs had a higher income. So the average hourly wages are going down a little bit because lower wage people, a la restaurants, bars, are coming back into the labor force. So that's it. So let me check to see who's out there. We have a comment. Let's see who it is. And if you're watching there on LinkedIn, Facebook, actually YouTube, I have to disable the comments. Sorry. Hey, Alex is out there. Hey, Alex, how are you? Thank you very much for tuning in, Alex. I greatly appreciate that. How's the porch portraits going? That's a pretty cool thing. And Alex just did this whole spread. Alex Wolf, he's a photographer, well known in my neck of the woods. And if you're looking for a photographer who does the drone shots, he does everything. He's really a very talented individual. Give him a call. Alex Wolf. We're connected on LinkedIn and Facebook, so just look me up and you could find him that way as well. So what else? The National Bureau of Economic Research declared that we were in a recession, worst kept secret in the world. A lot of people think that recessions are two negative quarters in a row. I'm not really sure where that came from, in terms of negative GDP, but the arbiter of recessions is the NBER. And the NBER has said we are in a recession. They said it was very clear when you went from peak everything to, high stock market, low, 50-year low in the unemployment rate, and everything just turned around immediately. I'm wondering when they're going to say when we come out of it. And I'm looking forward to that. By the time they say we're out of it, we'll pretty much already know, because this is very backward-looking stuff. So before anybody says, "Oh, who are they, Captain Obvious?" It's backward-looking stuff. NBER is a group of economists. It's like an association that you have to be a member of to make this determination. Okay, so Alex is out there. Yes, it's going awesome for the porch portraits. Awesome, going great. Love that. What else do we have? Raised $2,500 for Cerebral Palsy Association of Nassau County. You raised $2,500. Good for you, man. That is awesome. What does that NBER? National Bureau of Economic Research is the NBER. Okay. So that's really the update. Now, can this continue? Look, I've been calling for a while, and every show actually for like the last 8 weeks. Yeah, I don't know, 8 weeks or so. I was saying since March 24th, we've already hit the bottom, and there's more upside. Even this past Thursday, I don't do the shows on Fridays anymore for the summer, but Thursday, I said, hey, there's still more upside left. There's still, short term, the technicals look good. And I still think that every time you see a dip in the market, especially these industrials, industrial stocks, money managers are so far behind their benchmarks that they're going to have to buy them. They're just going to have to run in there and buy these stocks. The source of funds for them are selling a little bit of bonds, using some of the cash that they raised when they sold heading into the bear market, and selling some of the pantry type stocks and some of the winners of the last 2 months or so. Okay, like the pantry stocks. So that is my update. Are you positioned to benefit from this? Okay, so here's the thing. I've been saying, and I want to repeat this. I'm going to sound like a broken record here, but the way to win in this market, the way to win in this market is not to be all in or all out. Because if you sell all of your stocks, and there are plenty of people who've done that, selling everything and I'll wait till I'll get back in when things are lower. It never happens, because when the stock market goes lower, you'll say to yourself, well, now that it's going lower, I'm going to wait till it goes even lower. And then when it goes back up a little bit, people say, well, I could have had it lower, so now I'm going to wait till it goes lower again. And it's just endless procrastination. And before you know it, you're fighting a rising tide. And look at this tide, 9,000 up points in the Dow. It's really the rally we've had in the last couple of weeks is nothing short of remarkable. It's as remarkable as the retreat we had starting in mid-February. Oil was down. Now it's recovered a lot. People are driving. People are filling up their tanks. There is so much good news on the economic front right now. It's like I could barely sit down. It is unbelievably enthusiastic. I am unbelievably enthusiastic about what's happening in the economy at the moment. So how should you be positioned? You don't just have all work from home stocks, and you don't have. Can you bring that over here for a second? My wife is sitting with me. I'm still broadcasting from my living room, but hey, can you see this? That's me. I was on News 12 today with Stone Grissom. That's why I'm wearing a white shirt today. I was wearing a white shirt and tie. So I'll definitely post this on social media in a little while. Thank you. All right, that's cool. Okay, so I'm looking forward to that. So so I was on News 12 today talking about this stuff, but I have a lot more time to talk about it in my live stream. But I am honored that they call. Thank you very much, guys. I really appreciate the opportunity, and hope I'm of value to your viewers. So You have to have both, though. It's not just work from home stocks. I know a lot of people getting into that, in February and March. Oh, you have to have the work from home stocks, the food stocks, the pantry stocks. And what I said is you have to have both. You have to be diversified. Diversification still counts. Okay. It's a strategy that helps to mitigate risk, doesn't necessarily prevent your portfolio from going down in a generally down market, but it helps you lessen risk, helps you lessen retreats in your overall portfolio. It's not a maximization strategy. It's a minimization strategy in terms of risk, not a maximization strategy in terms of return. So you have to have both. You have to have the cyclical stocks, the economic recovery stocks. And here you go. You have them. You have to have both. You have to stay diversified, and you could rebalance. I've been saying this too. I've been saying this. I'm starting to sound like a broken record. I'm not saying that anymore. You should rebalance if you are too over your skis in terms of risk in the stock market. And if you thought that the down market that we had bottoming on March 23rd was going to ruin your retirement or set you back for years and years, and you were worried about that, it's time for you to do the right thing for yourself and get into a asset allocation between stocks, bonds, cash that's more appropriate for you. All right. Any questions out there? No? Fine. Alex, thank you for joining me. Anyone else out there? Thank you for joining me. I see a couple of viewers. Hey, Roberta, thank you so much. Stacy, thank you very much. I really appreciate that. Roberta and I recently reconnected on Facebook, high school friends and all that. And I'm really happy about that. Stacy, always great to see you. I know you're really into this stuff, and I hope I've answered any questions you may have. And now I'm going to really end it now. Now I'm definitely going to end the live stream, okay? I'm going to hit end broadcast. Remember, you're watching Be the Boss of Your Money, because I want you to be the boss of your money, not your money to be the boss of you.